Good morning and welcome everyone. Great to be amongst you today. We've got an exciting day lined up, great speakers, great topics to be discussed. In the 15 minutes that I have, I'm going to talk about three things largely. How the economy is doing, how the economy is probably going to do, how the sector has been doing, and how the sector is going to do. So with that, let me begin. A little bit about our firm. So we are a global management consulting firm headquartered in Japan, 10,000 strong teams in 18 offices, 11 countries. We work right from Europe to all the way to East. In our quest of advising industry stakeholders, we work with them, we collaborate with them, form joint ventures on digital transformation, business transformation, efficiency building kind of areas. We have offerings from multiple sectors. However, automotive and industrial machinery remains our key sector focus. And there we advise across the value chain from business strategy, sales and distribution, supply chain, R&D benchmarking, market intelligence, and so on and so forth. And not only just strategy, but also we work with our clients on implementation as well, whether it's supply chain transformation, organization, board transformation, profitability, and EBITDA improvement kind of activities. We have also been working a lot on alternate powertrains, right from motors to converters to distribution, finance, all the areas of the value chain. Some of our marquee clients include almost everyone in the mobility space. And we are also privileged to work a lot with the industry bodies and the government. So with that, let me just jump on to the macroeconomic overview. Talking about the global GDP growth rate. So the pandemic actually saw more than twice the impact what we saw in probably 2008 and 9. And we believe that with the ongoing geopolitical situation, inflation and policy tightening, the impact will continue to impact most of the economies. However, good news for India, if there is some good news, is that India is leading the pack, and we are likely to continue with a 7.8% forecast amongst our peers. Also talking about the market, I'm sure all of us have been tracking this. So yesterday, Nifty, NSE 50, was at 16,345. We might see some hope now with the geopolitical situations beginning to ease, if you will. Also, the IIP has been largely positive. Fortunately, mining and construction sectors have been bailing out IIP numbers, to say. We hope that the GDP growth rate for India will continue, albeit the difficult times. We should be able to steer okay, at least in the mid or long term. Talking about the sector specifically, so credit situation for us, for infra, mining, and agri, also registered moderate growth. Ease of credit access and improvement of NPS situation is likely to have a direct impact on the lending. And the credit outstanding in the agri segment has also been consistently increasing, which indicates a strong demand. Fortunately, the repo rates have been stable, which should lead to easing of infra and real estate sector offtake. Talking about the supply side volatility, so we forecast the metals and the crude oil futures to continue to go north. Russia and Ukraine, incidentally, while they constitute about 2% of the global trade, but they constitute about 37% of the global palladium supply, 17% of the natural gas, sunflower oils, and so on and so forth. Also, what's not helping with the crude situation is the rupee is probably the weakest that it is. So that's going to have an impact. We are going to hover around 130 is what we foresee, which will continue to drive our input costs for manufacturing. Talking about the gross value added, so agri, construction, and mining has continued to add value to the economy. And as far as the capital formation numbers indicate, there has been a significant growth overall on that sector as well. On the regulatory side, largely the outlook has been positive. There has been a lot of impetus from government. whether it's highways, whether it's agri-tech, irrigation. Also on the construction side, a lot of public-private partnerships has been leading to development. Private investment, which is the key for the 5 trillion economy, has been also growing consistently. And we foresee the government policy of inclusive development and growth to continue. National infrastructure pipeline also will be continuing to focus on the roads, railways, so that's a positive for the sector. And with Gati Shakti cargo terminals and other initiatives, we should be able to sail through okay, if not well, in the coming times. Majority of the capex, although will remain over-indexed on the road and energy sector, and this is something which should continue going forward as well. Talking a little bit about the sector. So although the growth per se slowed down in FY 19-20 to 13%, after that we have been seeing, and then we forecast future growth as well. We continue to be the third largest construction equipment market worldwide, 6.5 billion market size last year, and growth should continue at least double digits as far as we see it. In the earth-moving, in the construction equipment, earth-moving equipment continues to drive the majority of chunk with 58% market share. We also have been seeing a lot of mass premiumization, if you will, particularly because of introduction of newer features, better features. We forecast that the share of the economy excavators will continue to grow and will have probably a middle ground between these two stacks. I'm not going to talk about trade, but primarily what we've been seeing is, although there's been a focus on localization, but the net localization, which is where are the tier 1s and tier 2 getting their parts, that still has a significant exposure to global markets, China leading the pack there, not surprisingly. As far as the exports are concerned, Nepal continues to be our biggest export destination, and the exports from Southeast Asia seem to be decreasing due to the input cost inflation. This also most likely is going to continue. On the tractors, we see there is positive movement, and the growth realizations of the crop and the curtailment in lifestyle-related expenses has led to improvement of the disposable incomes for the farmers. So we don't see any major shift in terms of the marketplace there. Obviously, there's going to be a proliferation of technology, and I'm going to talk about that in a little bit. So talking about what's going to happen in future, if you will, we see three major shifts: customer preferences, business imperatives, and regulatory developments leading to the macro shifts here, leading from convenience seeking, cash flow consciousness, digital savviness, and more professionalism in the operations. On the business imperatives, data century will continue to govern our operations. There is fortunately abundance of capital. I'm sure the speakers later today who are associated with the finance industry will also reiterate this point. Also, significant growth of startups in our ecosystem continues to drive innovation and sector movement. And finally, emission regulations continue to challenge and push us to do better in terms of our product developments. I'll not take a lot of time here, but incidentally, on the product development side, we will continue to see the impact of operator shortages. Urbanization is going to lead to compact products coming on, and internet adoption will continue to lead the innovation, whether it's tire pressure monitoring systems, fuel monitoring systems, and so on and so forth. And therefore, what we can do as industry players is we need to continuously keep scanning the target segments in which we operate in. We need to continue to leverage the core strengths of the products and look at a forward-looking product strategy. Digitization, again, a lot of focus. What's also happening, and I'm sure all of you will sort of agree, is that while digitization is not new to the industry, the takers of digitization have sort of made it more of a hygiene than a delight factor. So we will continue to see the need of training the channel partners and staff for more digitization. We'll need to have more investments stacked up for digital in our value chain. And we need to keep driving transparency in prices and service because everything's digital now. On the connected side as well, the uptake of connected is probably going to go up with the 5G launch. That's going to drive the digitization even a few notches further. We also are going to see a lot of use cases on the productivity. Some of them are, in fact, exhibitors today. So the productivity, we also will see a major impact because of connected. And cost side also, a lot of better cost management will be able to see because of connected being in play. What that means is, most important is that organizations will need to continue to leverage data and look at how different use cases can be made with telematics, with connected, and how this can be monetized further with other value chain players. We'll continue to see an uptake in the asset light operations. Rentals will continue to drive our markets. What that also will mean is a lot of startups entering in this segment, and which means a higher competition, hyper competition sorts to say, in our segments. As I mentioned, the ESG mandates and the stricter emission regulations will continue to also drive us to do better in terms of our product portfolios. NVH is going to be a concern, so a lot of focus will be on managing NVH. And then again, fuel costs, we just spoke about the 130 oil price. That's also something which, if continued, can lead to havoc, at least in the short to mid-term. And again, on data forecasting, not just connected, but overall in the value chain, a lot of artificial intelligence, machine learning-led algorithms will continue to drive our supply planning, inventory planning, especially now when we'll need better financial discipline. And also in terms of input cost volatility, we need to manage and continue to do better. That's what we're seeing with our global clients as well. A lot of AI, ML sort of penetration increasing in the value chain. And same for supply chain. The Russia conflict is going to have an impact definitely for us. And this is a sector which was already feeling the shocks from COVID-19. However, we see that the supply chain, at least in the short term to mid-term, will need to manage better, whether it's in working capital, whether it's supply chains, looking at alternate vendors, etc. And finally, this is another interesting trend, and this is the last one for me, is the low barriers of entry. We have continued to see a lot of consolidation, a lot of inorganic activity here, a lot of buyouts, not only in India, but globally as well, a lot of SPACs and consolidation activities in various forms happening. We have seen an increased liberalization of the venture capital with farming as a service, precision farming, so on and so forth. A lot of capital, private capital is interested, which also means a lot of foreign investment, which might be coming our way. So what we need to do as sectors players is keep on exploring the M&A opportunities and how we can work together with this increased flow of capital. So just to recap, across the value chain in the short term, mid and long term, we will continue to see disruptions. But what we see and what we hear from our clients right now is a time to not wait and watch, look at consolidation, have a cautious optimism kind of approach, and that's probably will help us sail through. With that, I'll end my presentation. We have been fortunate to work with a lot of sector players on many projects on operating lease, construction equipment business, R&D benchmarking. I'm not going to talk about it, but happy to have a chat with you. We also have a joint venture with the sector players where we work on creating digital twins of the assets and monetizing the data from business transformation and digitization kind of ventures. So glad to have a chat with you over that as well. So thank you, ladies and gentlemen, for your time. I look forward to engaging with you along the day and looking together for a wonderful day today. Thank you. Goodbye.